All right, so today let's talk about going forward in the economy, how we're going to see investing. Are we going to see more appreciation investing or cash flow investing? And for that, I've got good old George Pino here today. I want to get his thoughts on it because he's seeing the market nationwide with all the STNL deals he's doing and all the brokerage network that he has. So what are you seeing out there and your thoughts on it?
So I think actually some investors are going to actually be forced for the appreciation just because they can't sell right now because of the economy with higher interest rates. So they're going to have to hopefully, and the interest rates are definitely cutting into cash flow issues. So we're seeing some investors that are being forced to it, but I'm seeing most investors right now are looking more for a cash flow play to offset and hedge against inflation.
Yeah.
So, we're seeing that. We're seeing a lot of investors going in, looking for specific properties to maximize their cash flow, whether it's repositioning the leases or whether it's just a good deal that's going in, like a single tenant net lease that has a cash flow and a stream of cash flows already built into it for a long term.
Yeah.
So we're seeing that very much so right now because, people, especially in the past, the last few years, it was pretty easy making money in real estate.
Well, the appreciation was there, right?
The appreciation was there.
If you could buy it, you could hold it for a few months, and you were going to make a little bit of money. But
absolutely, and I think those were more
and
I think those were more speculators, not investors.
Yeah.
So there's a lot of people that were jumping on the bandwagon, looking to do some quick flips. They had this whole, especially in the residential market, the BRRRR.
Oh, yeah.
Buy, rent, refi, repeat.
Yeah.
You're not seeing that right now because it's really not in that. The economy's not in that position. So I think we're going back to a little bit more of the metrics that are typically used on the typical foundation for investment. So we're looking at both cash flow as well as potential appreciation, and then using that to decide which property is better. There might be a property that is located in a better area that has higher appreciation historically in that neighborhood and lower cash flow. And it may even out to a property that has very high cash flow with very little appreciation.
Yeah.
Because, of course, money today is worth more than money tomorrow.
Right.
So if you have higher cash flow now, it may offset high appreciation gains in the future.
Right, yeah. How are you finding, are you starting to see more properties come on the market?
We've seen a lot of activity in the single-tenant net lease marketplace. I think we're still seeing, overall, actual transactions are down.
Okay.
However, pricing is still remaining pretty consistent and the same. Overall, and we've seen a little bit of a cap rate drop, or rather decompression. So it's gone up a little bit. So prices have come down a little bit on the single tenant net lease. But for most other assets, we're seeing it pretty stabilized, especially in the Southern California marketplace. So major metros tend to be a little bit more insulated for the ups and downs and the swings within the real estate markets. Major metros being, like Los Angeles, New York, Miami, Dallas, Chicago. They tend to be a little bit more insulated because it has, they almost have their own economy, so to speak.
Sure, yeah.
So, as they go forward, we're seeing, and there's always demand for those neighborhoods. So we're seeing that demand that's pushing the prices or keeping the prices stable.
All right. Well, George, thank you for coming in today. For those of you watching, make sure you give us a like, and if you haven't done so, please subscribe.